The following program paid for by Lifespan Wealth Management. Providing financial advice since 1993. It's time for Your Money with Sherry Goss, Randy Goss, and Jonathan Eisner. And now from the Macon studios of News Talk 940 WMAC, it's Your Money.
Good morning, Middle Georgia, and thanks for tuning in to Your Money, produced by Lifespan Wealth Management. As financial advisors, the main thing we do is provide retirement planning advice and manage our clients' investment accounts. So if you're looking for an investment advisor, call our office at 478-922-8100 to set up your complimentary consultation.
Lifespan Wealth Management has offices in Macon and Warner Robins for your convenience and has been serving Middle Georgia for over 30 years. You can learn more about our services by visiting our website at retirerelax.com. And while you're on our site, go to the special reports section where you'll find several reports that are available to you for free. You can also sign up to receive our digital feeds, which are short videos providing great information relevant to retirement, investing, and matters that affect your money.
We also offer seminars to the community at no cost. So if you're in need of a guest speaker for your church or civic organization, give us a call, and together we can decide what topics you would like us to present to your group. Again, our contact number is 478-922-8100.
Good morning.
Good morning.
So Dow Jones Industrial Average and NASDAQ Composite are on track for their 6th and 7th straight monthly gains, respectively. That puts both indexes on course for their longest winning streak since January of 2018. The S&P 500 is headed for its 6th consecutive monthly gain, putting it on course for its longest winning streak since August of 2021. This month's gains were especially notable given the number of jolts markets faced. In early October, stocks were rocked by a flare-up of U.S.-China trade tensions. Shares recovered only to be dinged days later amid concerns about the health of regional banks. This week, indexes fell amid fears over tech companies' vast expenditure on artificial intelligence. On the flip side, strong earnings across the range of sectors buoyed stocks, as did optimism ahead of this week's meeting between Trump and Xi Jinping. As of Thursday, the three major U.S. stock indexes were up 2% or more for the month. The NASDAQ Composite was up more than 4%.
Yeah, Trump, whether you love him or hate him, you have to admit that he's getting a lot done. This week he was working deals in South Korea and China, and one of the deals involves China buying 87 million tons of soybeans from now through 2028.
He does seem to always be working deals, doesn't he?
Like
around the clock, always be working deals.
Well, we're going to see if that soybean deal really comes through, though.
Yeah. NVIDIA, which is in our portfolio, little shameless plug, has officially become the first $5 trillion company. Shares of NVIDIA this week passed the $205 value that was needed to hit that $5 trillion mark. And it's truly remarkable to me how fast this company has grown. I remember vividly when it was being talked about as joining the exclusive $1 trillion club.
Yes.
And now, not that much later, it's over $5 trillion.
Yeah, and in a similar note, Apple and Microsoft are competing to be the next $4 trillion company.
Yeah, it's just funny because back when I remember hearing all that, it was can they catch Apple, can they catch Microsoft, and now those two are trying to catch NVIDIA.
Yes.
Yep.
So, Fed cuts interest rate by another quarter point, but data blackout obscures the path ahead. The Federal Reserve lowered interest rates at its second consecutive meeting on Wednesday of this week, extending an effort to prevent a recent slowdown in hiring from turning into something much more serious. The latest quarter point cut will reduce the Fed's benchmark short-term interest rate to a range between 3 3/4% and 4%, the lowest setting in 3 years. The easiest part of unwinding the central bank's aggressive rate increases may be over, but officials still have a lot of data to sift through to determine how much further to go regarding future rate cuts. Separately, officials agreed to stop their 3.5-year campaign to shrink the Fed's $6.6 trillion asset portfolio on December 1st. That effort has been designed to passively unwind pandemic stimulus. Officials have long said they would cease the runoff of their Treasury holdings when they detected evidence in overnight lending markets that banks were no longer awash in surplus cash. Those signals have mounted over the past week. The Fed will continue to shrink its holdings of mortgage-backed securities, but it will replace maturing bonds with short-term Treasury bills starting in December. At a news conference, Fed Chair Jerome Powell pushed back against market expectations that assume a December rate cut is highly likely. Quote, "It's not to be seen as a foregone conclusion. In fact, far from it," Powell said. Policymakers brought strongly different views about how to proceed in December.
Here's another quote from Powell. Fed Chair Jerome Powell acknowledged Wednesday that the soaring stock market is helping support consumer spending and the overall economy right now. If the market goes down, Powell said, it could hurt consumer spending, but spending wouldn't take a large hit unless the market took a plunge. Very positive comment. Anyways, so my question, why would they call out of work when they need the money?
It's simply in protest. And they probably have a lot of sick leave built up, and so they can just afford not to be there.
So since last Saturday, more than 23,000 flights in or out of U.S. airports have been delayed, though weather, tech outages, and airport construction have also contributed to that figure.
Yeah, that question, Sherry, I think was in a later article when we're talking about this affecting. So that was misplaced right there.
Yes, I wonder what happened.
We'll talk about that in a few minutes when we talk about this affecting airport security.
I knew where she was going with that, but it's
Right.
in protest, though.
That's crazy.
Anyways, American corporations are crushing it. This stock rally isn't just about tech. U.S. companies are setting up the stock market for an end-of-year rally that could defy the risks from tariffs, inflation, and the trade war with China that still overshadow the world's biggest economy. A host of bellwether companies outside the tech topped Wall Street's forecast for sales and profits, potentially carving a smooth path for the market's heavier-weighted stocks.
General Motors, an old economy stalwart, offered a robust outlook for the final months of the year that helped lift the stock to its highest close on record. 3M, which has outpaced the S&P 500 this year, also lifted its 2025 profit forecast as new CEO Bill Brown keeps launching new products and boosting revenue from existing customers. And GE Aerospace, the largest of three divisions, the famed industrial conglomerate split into last year, raised its profit outlook for the second time in 4 months. The market for aircraft is robust, allowing for improved deliveries of GE engines. The stock also closed at a record high.
On the consumer end, Coca-Cola's recent focus on healthier drinks, including sugar-free sodas, and its ability to pass on price increases to its customers helped it beat Wall Street's earnings forecast. Overall revenue came in at $12.5 billion, the highest in more than a decade. Gene Boyven, who heads the BlackRock Investment Institute, sees resilient economic growth, Fed Reserve rate cuts, and continued spending on artificial intelligence, all as likely to bring broader earnings growth. The broader market only got a modest boost from the quartet of solid updates. That makes sense given their relatively limited influence on major indexes when compared with their mega-cap tech peers, although they did help lift the Dow Industrial Average. Still, the underlying strength of the results, as well as signals from bank earnings last week, bode well for both the remainder of the profit reporting season and the economy's near-term prospects.
The solid run of profit figures speaks to American corporations' ability to weather uncertain tariffs, supply chain disruptions, and an increasing cautious customer. The higher costs for labor and raw materials that have weighed on the margins. The biggest U.S. companies aren't only able to adapt, but also benefit from innovation that might not directly affect them. A company using AI to streamline its domestic workforce can quickly find itself with more financial firepower to spend on products and infrastructure. A tech company getting a boost from tax benefits tied to data center construction can hire more people.
All right, let's move on to a story that I really like. It's about a company that's we often hear about jobs going overseas, but there's a new company that's keeping jobs here in America, and the company's name is Provolus, and they're looking to take small towns here in the southeast, basically, and revitalize them, basically. Provolus provides big companies with outsourced services such as insurance claims processing and cybersecurity monitoring. Their business model must be working because their revenue growth has been about 35 to 40% year over year with an unusual playbook, investing in rural America. The company has around 250 job openings right now, with hundreds more in the pipeline. So if you're one of the many who are getting laid off right now, you might want to give these folks a call. But here's what makes Provolus different. Instead of locating its services in technology jobs in the metro area or sending them to countries such as the Philippines, Provolis seeks out small towns, mostly in the South, looking for places where the average individual income hovers around $30,000. There, they find people who are eager for the jobs, and they will teach them the 21st century skills, but who have very few opportunities. It is their attempt to help reverse the decades of disinvestment in rural communities and a model for creating jobs in often overlooked pockets of the United States.
And I believe they get their insurance for $1 a month.
You're correct. What benefits does Provolis offer? They offer Blue Cross Blue Shield for $1, including vision and dental.
That's fantastic.
They also
That's
offer
unheard of.
They also offer paid time off, life insurance, paid training, scholarship programs, and a 401k. The paid time off programs improves tenure at 3 weeks, and all employees get the same benefits. It's a pretty sweet deal.
I've never heard of
Sounds like
anything
it.
like this. They got it right, and Chuck Ruggiero, their founder, says there is an untapped labor market in rural America, and in the years after the 9/11 attacks prompted him to look for ways to create jobs in the U.S. He says these people have the grit, the grind, and the aptitude. But to find the people with the right aptitude for these jobs, Provolis created assessments that help it find the food service or retail workers who might have a bright future in tech or management roles. Carol Kimison says she came from the restaurant background with no experience, who, along with her husband, was hired and trained by Provolis. She was hired in 2024 and recently was promoted to a $17 an hour role, managing workers who monitor fraud concerns with a bank client. The city where she lives is Tahlequah, a 16,000-person town in northeastern Oklahoma that has a poverty rate of 20.3%, about 8 percentage points higher than the national average.
Yep, and paradoxically, those qualities made it an attractive place for Provolis to open its 4th location in 2022. The company has 3 more offices opening in other towns in 2026, bringing the total up to 12. In Tahlequah, it has 200 employees and is finishing a second facility that will hold 100 more. Training classes with up to 40 people are almost always in session as new employees come aboard.
Around 50 million people, or 1 in 7 Americans, live in rural areas. These regions generate less than 10% of the gross domestic product, most of which comes from resource-intensive industries such as agriculture, mining, and manufacturing. So the arrival of IT and professional-style jobs is something of a novelty in Tahlequah, as well as Monticello, Kentucky, another community where Provolis operates, and Bruton, Alabama, the company's headquarters town.
Yeah, companies including Chick-fil-A, the Navy Federal Credit Union, and the internet provider Brightspeed outsource a small portion of their IT or back office work to Provolis. Drawn by the company's mission, they also reap the benefits of onshore services. Time zones line up, data is easier to protect, and the sites don't require overnight flights. Those advantages, along with what executives say is higher productivity and quality, allow Provolis to compete with the big offshore competitors such as Infosystems, Cognizant Technology Solutions, and Wipro. With around 1,200 employees, Provolis is dwarfed by those outsourcing giants, which each employ hundreds of thousands of workers, mostly in India, but also the Philippines, Vietnam, Mexico, and other lower-cost countries. Their services can cost 20 to 30% less than Provolis. The simple reason is, of course, wages.
That makes places such as Tahlequah appealing to Provolis and its customers. In small towns, Provolis competes for workers with employers such as Walmart. So entry-level pay starts low, at roughly $13 or $14 an hour, for workers who might have college degrees or years of work experience in other fields. Unlike most hourly jobs, the wage potential at Provolis is high for some, and the benefits package is generous, like Corey was talking about a few minutes ago. Health insurance costs $1 per paycheck. For the first 6 months, employees receive scheduled raises every 60 days and another at the 1-year mark. After that, pay increases are merit-based. When Provolis opened in Tahlequah, it told the town that salaries there would average around $38,000, or 27% more than the local average income of around $30,000. A handful of non-executive employees at the Tahlequah office earn or will soon earn 6 figures.
Jonathan Kimball is on that path. He worked full-time managing a local McDonald's while finishing his computer science degree at Northeastern State University and was hired by Provolis in 2022. Quote by him, "There wasn't a lot in the 30-mile area, and I wasn't too keen on moving around," said Kimball. He grew up in Stillwell, Oklahoma, Family is important to me. It kind of limited my scope of work. His pay was nearly tripled since he joined the company, and he and his wife bought a house in 2024.
So the jobs aren't for everyone. Turnover averages 30 to 40% a year, Keough said. When people leave, they often say the work, such as phone calls with people confused about their insurance benefits or whose laptops have stopped working, was too hard.
You know, working a help desk is hard. Insurance is part of our business, and it takes years to obtain a working level, a working knowledge level to help other people work through their issues and the problems that they may have. I can only imagine the frustrations new employees on a call center would have, even with a good computer aid. And I can see why there's a high turnover of employees, but the payroll package is substantial, and in some of these rural areas, it is truly a lifeline.
Right. You are very right. The jobs have proven to be a good source of work for people who often have complicated lives. Single parents needing some flexibility, soldiers who have transitioned out of the military, middle-aged workers whose bodies can no longer handle physically demanding blue-collar jobs. Around 31% of the company's employees have an associate's or bachelor's degree, which just blows my mind. For employees who might experience a bout of homelessness, most Provost offices have showers and laundry rooms. The company has occasionally put workers up in hotels while connecting them with public housing. There are community closets in every location to help employees put together a professional wardrobe. I mean, these guys, it's mind-boggling what they're doing for these people.
They're checking all the right boxes for their employees. I love this. I think it's a great story.
It's cool. They found a niche, which is lower income America, rural areas.
The forgotten areas.
Yeah, and they're taking care, investing in these areas and taking care of the people in ways that they haven't been taken care of other's or wouldn't be taken care of otherwise.
You always hear you take care of the employees and they'll take care of you. And
right.
they did that as part of their
mission.
Their mission. I mean,
yeah.
They're probably their mission statement.
Yeah.
It's fantastic.
It is. I like that story. The end of the rip-off economy. If you know how to use artificial intelligence, it can save you a lot of time and money. Leasing a new car? Be sure to upload a photograph of the contract to ChatGPT first. Need help with a leaky tap? AI often understands the issue, and at a lower cost than a handyman. Parents with a fussy baby can now use chatbots to answer questions in seconds rather than waiting around for a doctor's appointment. These examples add up to something bigger. As AI goes mainstream, it will remove one of the most enduring distortions in modern capitalism, the information advantages that sellers, service providers, and intermediaries enjoy over consumers. When everyone has a genius in their pocket, they will be less vulnerable to mis-selling, benefiting them and improving overall economic efficiency. The rip-off economy, in which firms profit from opacity, confusion, or inertia, is meeting its match. Information advantages have existed for as long as markets themselves. In medieval England, grocers used fake scales to dupe customers. Pub landlords put salt in beer to make patrons thirstier.
I think that's funny.
That is funny. I wonder if they're still doing stuff like that.
Oh, that's great.
The internet has made it harder to take advantage of customers. With Carfax and other providers of vehicle data, customers can check the history of a vehicle. Taxi drivers now struggle to take people on long but profitable routes, since apps such as Lyft and Uber tell them exactly where to go. TripAdvisor, a review website, sends tourists to restaurants that provide a decent meal. In the early 2000s, there were more than 20 branches of Angus and Aberdeen steakhouses, a notorious tourist trap in London. Today, there are 4, and the ones that remain are better than before.
So guess what? They had to get better to survive. Such developments led pundits to proclaim the end of rip-off markets. Information perfection is on the rise, pronounced Jeff Bezos, the founder of Amazon, in 2007. But it is estimated that 25% or so of American consumer spending goes on goods and services with severe informational asymmetrics, from healthcare to home renovations, down from 30% at the turn of the millennium. But that means plenty of rip-off industries remain. The building trade is a classic example. Homeowners rarely know the first thing about, say, HVAC or paint, which puts them at the mercy of bad actors. Estate agents lease properties with defects that become apparent only once the tenant has moved in. Lawyers provide bad advice, but clients do not find out until it's too late. Doctors offer the more expensive treatment options. Bureaucrats make all sorts of decisions, from unexpected tax penalties to rejecting a planning application, that are difficult to comprehend if you are not an expert. This reminds me of my dentist who told me I needed 2 fillings when I really didn't. So the bottom line is quit. Today, question everything.
I don't disagree with you, but AI is going to help us with that in so many ways.
Right.
You know, a government commissioned study in Britain in 2024 estimated that citizens lost the equivalent of 2.5% of a GDP a year as a result of buying goods and services that were unacceptably poor quality or suffered from other defects. This encompassed everything from needing to buy different versions of the same product to the time wasted on complaints. For example, the market for a second-hand car is still a tough one. Startups may provide a glimpse of the future. CarEdge uses an AI negotiator to haggle with dealerships on vehicle prices and terms. Pruvo monitors your refundable hotel bookings, automatically rebooking when the rate drops. And Generalist LLM are already helpful. A survey by Clio, a software firm, finds that over half of customers have used or would use AI to answer a legal question. When things go wrong, consumers can use chatbots to get compensation. A recent study found that by late 2024, roughly 18% of financial consumer complaints involved LLM or large language models assisted writing.
Evidence on the impact of AI-empowered consumers is limited but suggestive. The extent to which AI truly eliminates ripoff markets depends on two things. First, consumers need to know how to use AI properly. Second, providers and retailers are likely to fight back with their own AI tools. Amazon listings are already swamped with AI-generated product descriptions. Use ChatGPT with your plumber today, and you may be able to convince him to cut his price. Use ChatGPT with him in a year, and he may have his own model telling him to charge you even more. Companies are working on generative engine optimization, which could result in chatbots putting out information favorable to their product or service. In time, many markets may require AI arbitrators, where both parties agree to abide by the ruling of an impartial third-party bot. This is great. This is just crazy stuff that essentially the two parties are going to let a robot sort it out.
Yeah, we're our bots fighting each other.
Right.
For the
My
right
bot
answer.
says that your bot is lying, and
But, you know, this just goes to prove the fact that, you know, we've said it a couple of different times on the show that, you know, this stuff is here to stay. You're going to have to get used to these things, and you're going to have to get smart on how to use them so that you're not taken advantage of.
Agreed.
I think that's really the bottom line on this stuff.
well, what seems evidently clear is that the days of the know-nothing consumer are well and truly behind us.
That's right. So, anyway, we're already at the halftime show, so stand by.
You've been listening to Your Money, brought to you by Lifespan Wealth Management, proudly serving Middle Georgia for over 30 years. Our mission? Helping folks just like you plan for a secure and stress-free retirement. Need a trusted financial advisor? Call us today at 478-922-8100 and schedule your complimentary consultation at our Macon or Warner Robins office. Want to learn more? Visit us anytime at retirerelax.com. Because when you plan smart, you can retire and relax. And here's something extra. We offer free educational seminars for the community. If your group needs a guest speaker, give us a call and let's make it happen. That's 478-922-8100. Now, let's get back to the show.
All right. Corey.
Bad news on employment for a lot of workers this week. Amazon.com said that this week they would cut 14,000 corporate jobs, with plans to eliminate as much as 10% of its white-collar workforce eventually. UPS said Tuesday it had reduced its management workforce by about 14,000 positions as well over the past 22 months. Days after the retailer Target said it would cut 1,800 corporate roles. Early in October, white-collar workers from companies including Rivian Automotive, Molson Coors, Booz Allen Hamilton, and General Motors received pink slips or learned that they would come soon. Added up, tens of thousands of newly laid-off white-collar workers in America are entering a stagnant job market with seemingly no place for them.
At 5:30 a.m. on Tuesday, Kelly Williamson woke up to an alarming text from her employer, Amazon's Whole Foods Market, urging her to check her email. Review ASAP and stay home from work today, the message said. Williamson's role on the asset protection team was being eliminated. The badge and laptop for the 55-year-old from Austin, Texas was deactivated. She was given 90 days to look for another job at the company. She said her personal belongings are being mailed to her, which I find horrible. A leaner new normal for employment in the U.S. is emerging. Large employers are retrenching, making deep cuts to white-collar positions and leaving fewer opportunities for experienced and new workers who had counted on well-paying office work to support families and fund retirements. Nearly 2 million people in the U.S. have been without a job for 27 weeks or more, according to a recent federal data. What's behind this? Behind the wave of white-collar layoffs, in large part, is the embrace of artificial intelligence, which executives hope can handle more of the work that well-compensated white-collar workers have been doing. Investors have pushed the C-suite to work more efficiently with fewer employees. Factors driving slower hiring include political uncertainty and higher costs.
Yep. What we're beginning to see is the remaking of what the office work looks like. It is going to leave a lot less time for the remaining managers to effectively supervise and meet with the managers that remain. It will settle the employees fortunate enough to have jobs with heavier workloads. And I'm afraid to say now that they have targeted the C-suite, the white-collar workers, that is, next will be the next rung down, and the cascade of restructurings that have created a precarious feeling for managers and staff alike. It is also tightening the options for those who are looking for employment. Around 20% of Americans surveyed by the Wall Street Journal, NORC, which is their polling partner, this year said that they were very or extremely confident that they could find a good job if they wanted to, which is still lower than in the past. Meanwhile, opportunities for frontline, blue-collar, or specialized workers are growing. Companies describe shortages of trade, healthcare, and hospitality and construction employees while pausing hiring for consultants and managers. And they're laying off staff in retail and finance and deploying AI to work in accounting and fraud monitoring.
This is why it's really important to understand what the college degree you want to get will really get you.
Absolutely.
If you are a person getting ready to go to college, or perhaps you have a kid or grandkid preparing for college, they really need to hear this. Don't let the college advisor sell them on a career that is going to be obsolete when they graduate. The career horizon is changing because of technological advancements, and those in the job pipeline now need to adjust.
That's right. The white-collar jobs on the chopping block have been roles that many American workers aspire to secure. They paid up for college credentials to qualify for an interview. Then they landed comfortable jobs such as human resource managers and mid-level engineers. Now, that once was a stable position feels like a ticking time bomb, with employees who work their way up the corporate ladder awaiting their turn for a video call now announcing their last days.
Jobs that are higher paying and require a bachelor's degree are more exposed to AI than other positions, economists at the Federal Reserve Bank of Philadelphia have found. Even as the economy grows, hiring has weakened, with economists expecting slower job creation later this fall. In such an environment, companies are becoming choosier, and both experienced white-collar workers and new college graduates seeking their first jobs are getting squeezed. Mo Teg, who runs a recruiting firm, said that he has seen the number of 40-year-olds in search of work surge in the last year. They're telling me they can't keep up with the technology that's out there as much, said Teg of GoBoo Associates. Tech is outpacing their skill set. Pretty scary stuff. Job applicants said that they're getting rejected in favor of candidates who have almost identical work experience to the job posting. Companies can now hire employees that match their exact desired qualifications.
That dynamic is helping to squeeze entry-level hiring. The class of 2025 submitted more job applications than the class of 2024, while receiving a smaller number of offers. Investors are pressuring companies to streamline operations, Hoffman said, seeking headcount reductions as steep as 30%. Executives should ask themselves whether they can do so and whether it is the right thing to do.
So I have a comment about this whole article. So when I got out of high school, I wanted to go to college. And I changed my degree like 10 times because I didn't understand what I wanted to be or what was really out there. But back then, I got sold by an advisor. I got sold on a degree, and he promised me that I was going to have this great job making really good money if I did it. And I was in a group of about 20 people who got this degree. When we graduated, I'm the only person that got a job, and I had to move to get the job. Nobody else got a job in the career field that we studied. It was a total lie. And so you have to be really careful when you speak to advisors, because I doubt that that's any different today than what it was then. And what it was, the advisors wanted to secure their jobs. And if they didn't have enough students in the degree program they were promoting, they would lose their jobs. And so that's why there's such a a mess in the college situation, and you don't know what the truth is. So you've got to get out there and do your own research and make sure that the degree you're getting is actually going to get you something. And I recently had a college graduate come see me for advice because he can't get a job because of what he studied. And now he's been without a job basically for 2 years, and so nobody will even look at him because he has no job experience other than, I think, Chick-fil-A and some other odd job that he got, because he can't get in anywhere where he can actually get experience and become something more. You know what I mean?
That's right.
It's just really, this is really rough.
But now, like we just said a second ago, there are certain career fields like the mechanics and let's see, where was
Plumbers.
it? The plumber, the people, the blue collar workers. Those are the people that there's tons of jobs open. So you might want to diversify what you do and how
Right.
and be prepared for this kind of thing. The entire work environment is changing. So I mean, AI is going to upset the apple cart so much. So I mean,
You guys run an auto shop in
Yep.
Milledgeville,
Yep.
and would you guys say that there is demand for mechanics and hands-on workers?
absolutely.
Yeah, and are you guys able to keep those pretty staffed there, or is there always the need for more?
There's always a need for a good mechanic, and when the one walks in the door, we do interview them. Luckily, we've had a staff of mechanics that have been loyal to us for the last 5 years. We have had zero turnover.
Oh, wow.
And so that's kind of rare. For several years, they kind of hopped around.
Sure.
We had maybe one a month would leave, but ultimately, most of them wanted to come back.
What everybody needs to do is they need to visit the Central Georgia Tech website and look at the 18 careers that are absolutely free.
Yeah,
You mentioned, the plumber.
The governor's high demand career fields.
Yes, and there's a bunch of careers that are free that you can compete. You can complete them in under 2 years. And in fact, some kids in Houston County, they're changing it so that junior, senior year, you could actually go to those programs. I don't know when that kicks in, but I would highly recommend that people consider those fields because that's where the demand is. And you won't go into a bunch of student loan debt to get a degree that's worthless.
But I would also say, there may be jobs that you want to do,
Right.
and get that degree if that's what you want.
Right.
But diversify and get a second degree at the same time. Don't
Just be equipped. Be equipped for what else you may have to fall back on.
2 weeks ago we talked about this lady that sent her daughter off to school, and her initial guidance was go get your degree, party, and have fun. And then she started really reading about how the dynamics of the hiring environment was outside. Once people left college, where it was getting to be so tight, she said, "No, now I want you to go get 2 degrees and get involved in lots of volunteer activities and meet people and network." She understood then that you're going to have to do this in order to get, first of all, in front of somebody,
right,
and be diversified so that you can get a job. You're going to have to be standing out. You're going to
ahead
have to be
of the pack. You have to.
You have to be. You got to have to be heads and shoulders above these people, above your peers. So that's what you've got to do. You've got to be better than the next person in the room.
Yeah, or than the majority of people in the room.
Yes.
I actually had a teacher at college. It was just a general ed, like a theater history. And he said that he became a teacher because he could not find work, but he was actively teaching that degree to more people. So he became a teacher because he couldn't find any work in the field, and that was the only option. But he was actively teaching that degree to more people.
Where there were no jobs.
So that
Where
they
there was
couldn't
no
get
jobs.
work.
Oh my gosh.
That's all he knew then.
That's all he could do. He
yeah.
said,
That's
"The
not a
only
good
thing
spot to be in."
I can do is be a teacher."
Man.
So did you get up and walk out of his class?
He majored in that subject.
Right.
Oh my gosh. Wow.
All right. More uplifting news. General Motors layoffs. GM plans to lay off more than 3,300 hourly workers at plants across Michigan, Ohio, and Tennessee starting in January. Of those, more than 1,700 are being laid off indefinitely, while more than 1,500 are expected to be called back sometime in mid-2026. The automaker said that battery plants it jointly owns with LG Energy Solution in Ohio and Tennessee will be idled starting January 5th, and that it plans to resume production again sometime mid-year. GM is also placing about 1,200 of the 3,400 workers at its dedicated EV, electric vehicle, assembly plant in Detroit on indefinite layoff.
The Detroit EV plant, which typically runs on 2 shifts, is idle until November 24th. Starting next year, it will operate on only 1 shift. The factory produces GM's bigger, more expensive EVs, the Chevrolet Silverado, the GMC Sierra, the Cadillac Escalade IQ, and the GMC Hummer models.
Yeah, GM isn't alone in pulling back on the EV plans. Ford is moving workers from the plant that makes the electric Ford F-150 Lightning to a nearby factory that makes the more popular and profitable gas-burning version. Nissan has decided not to offer its Ariya EV as 2026 models, and Honda has halted orders for the electric Acura ZDX, which is manufactured by GM. The company has the broadest lineup of EVs with about a dozen on the market, and has previously said ramping up sales was a key part of its strategy to achieve profits on electrics. Lately, however, automakers has been stepping back to contain its losses.
So this is all so crazy to me. They made these investments due to government subsidies, so I had to look this up. Here's a breakdown of government spending on EVs. The U.S. government awarded a total of $3.3 billion with a B in federal funding for EVs through 16 different programs. The subsequent bills expanded eligible funding exponentially. $7.5 billion dedicated to building a national EV charging network, tax credits of up to $7,500 for a new EV or $4,000 for a used one, inflation
Which are expired.
All right.
Yep, they sure did.
Inflation Reduction Act. This is a 2022 law providing significant clean energy investments with at least $47 billion in eligible funding to support EVs through grants and other programs. Loans and financing. The Department of Energy's Loan Program Office has financed billions of dollars for EV-related projects with $23.2 billion. Many states and local governments offer their own financial incentives for EV purchases and infrastructure with varying rebates and tax credits. State factory subsidies. States and localities awarded at least $13.8 billion in economic development subsidies to EV and battery projects. So when is the government going to stop subsidizing the good idea ferry?
Well, the simple answer is probably never. I don't dislike the idea of an electric car. I just think that the technology, like batteries, needs to get better, meaning smaller and lighter, and that the charging needs to be faster and less cumbersome. And the data centers, they've been in the news a lot. The two big points that are of concern are the drain on the electrical grid and the use of water. And all these things were subsidized by the government. And they are valid concerns, but there's some very smart people working on these things. And once they solve them, the areas that allow these data centers could have them be self-contained, and they still get the tax revenue from them with no strain on the local electric grid or the environment. Sometimes tech just needs to catch up to the good ideas.
Right. Next up, the surprising extra estate planning step required for Social Security benefits.
This is important.
Many people know it is important to have a financial power of attorney so someone else can manage your finances when you are not able. What many people don't know is that the Social Security Administration doesn't recognize traditional powers of attorney. An additional step must be taken to appoint the person who will manage your Social Security benefits when help is needed. To ensure a person of your choice can manage your Social Security benefits, contact the SSA and make an advanced designation of a representative payee. Created under a 2018 law, this rule allows a person to choose one or more individuals to manage the person's Social Security benefits. The SSA then is required to work with the named individual or individuals in most cases.
Yep. You can name up to 3 people as advanced designees and rank them in order of priority. If the first one isn't available or isn't unable to perform the role, the SSA will move to the next person on the list. Someone who is already receiving Social Security benefits may name an advanced designee at any time. Someone claiming benefits for the first time can name the designee during the claiming process. The designee may be named using your My Social Security account on the Social Security website by contacting the Social Security Administration via phone. You can change the designees at any time, too. The Social Security Administration doesn't automatically follow your designations. The Social Security Administration first will evaluate a designee and determine the person's suitability to act on your behalf. Once accepted, the designee becomes the representative payee for your benefits. The payee receives the benefits on your behalf and is required to use the money to pay for your current needs.
This is why it is critical that a trustworthy person is chosen.
Absolutely.
100%. Representative payees generally are individuals, but a representative payee also can be a social service agency, a nursing home, or one of several other organizations recognized by the administration to serve as payees. If you don't name someone, the administration will name a representative payee on your behalf if it decides that you need help managing money. Relatives or friends can apply to be representative payee, or the administration can choose someone. Sometimes a court will appoint a legal guardian. Representative payees generally can't charge fees for the services unless they receive authorization from the administration or are court-appointed legal guardians authorized to charge those fees. Once someone is approved as a designated payee, the individual must file an annual report with the Social Security Administration detailing how the benefits were spent. Recipients and records must be retained in case the state agency asks to review how the funds were spent. The administration has a booklet explaining the duties and responsibilities of a representative payee. Being a designated representative does not confer on the person any legal authority or power over any other aspect of your finances or personal life.
So I have had many clients who have had to become a representative when a parent moved into a facility for care, as they had to manage their overall finances and pay the bills. And they had to track everything monthly and submit it at the end of, when they're with the tax return. And in some cases, it's complicated. In some cases, it's very easy. But you've got to make sure that you trust the person that you're assigning this duty to. And I'll never forget when my first job in a nursing home in Spokane, Washington, and I was the activity director, and we had a lady roll up to the front door, get a wheelchair out of the back of the car, open it up and get her mom, and stuck her mom in it, and then drove off and left her mother in a wheelchair outside the front door. So we saw her do it, and so we went out there and got the lady and figured out who she was and all of that. Well, it turns out the daughter who dumped her off thought she could dump her mother in front of a nursing home and keep getting the Social Security because she was getting the check. That was because she was the designated payee.
Wow.
So she thought she could just dump her off and then just keep getting the check, and that's not how this works. Oh, my gosh.
The high cost of low-fee advice. For some wealthy families, the allure of low fees can be irresponsible. After all, who doesn't like paying less? But when it comes to managing complex, multi-generational wealth, what looks like savings on the surface often turns out to be one of the most expensive decisions a family can make. Hidden costs from fund expenses and the transactions spread to unrecognized tax inefficiencies can often offset or exceed the savings.
Right. In recent years, technology-driven platforms and discount advisory services have made professional wealth management appear more affordable than ever. Low-fee advisors and planners, even at the well-known firms, often advertise annual fees as low as 0.25% compared to the traditional 1% charged by most full-service wealth managers. The simplicity and predictability of those flat or subscription-based models can be appealing, especially when traditional fee schedules seem opaque or asset-based charges feel expensive. Unfortunately, advisory fees only tell part of the story. For families whose wealth involves operating companies, trust foundations, or complex ownership structures, the real cost isn't just the line item on the invoice. It's the cascade of hidden charges, missed opportunities, missteps, and inefficiencies that low-fee providers fail to prevent. Low-fee models can work well for investors in straightforward financial lives. Think single account, minimal estate complexity, and limited tax exposure. But low-fee advisors often are often ill-suited to wealthy families who manage multiple entities, generations, or cross-border investment.
Here's what often happens when sophisticated families opt for low-cost advice. While fees do appear low, hidden costs from fund expenses and transaction spreads and the tax efficiencies that Corey mentioned often offset the savings, like he said. Without coordinated tax and investment oversight, families may miss opportunities to harvest losses, defer gains, or optimize asset allocations. Discount advisors typically limit portfolios and pre-selected ETFs or mutual funds, excluding private equity alternatives and other institutional-grade opportunities available through full-service family offices. Over time, the absence of these higher return strategies can dramatically erode relative performance. Families relying on multiple low-fee specialists one for investments, another for insurance, another for estate planning, maybe a fourth for tax advice, often suffer from uncoordinated decisions and poor execution. The lack of holistic oversight means no one is accountable for the total outcome, and in many cases, advisors don't even know what the others are doing for the family.
Inexpensive providers typically offer minimal administrative or family office support, leaving clients to fill the gaps, coordinating custodians, reconciling accounts, organizing reporting, and following up on execution errors. What that means to simplify life ends up consuming time and creating stress. A narrowly investment-focused advisor may overlook strategies that integrate tax, estate planning, and philanthropic goals. For wealthy families, those oversights can dwarf the fee differential, sometimes costing millions over a lifetime. By contrast, a comprehensive advisory model, whether through a dedicated family office or a fully integrated wealth management firm, provides not only investment management but also strategic coordination across every dimension of family wealth, trust, tax, estate, governance, and education for the rising generation. These firms typically charge higher fees, whether a percentage of assets or a flat retainer, but they deliver measurable long-term value.
The right fee structure should balance fairness, transparency, and alignment of incentives. A well-designed arrangement ensures the advisor's success is tied to the client's success, while providing clarity about what's included and how costs scale over time. In other words, a thoughtful fee structure isn't just about what you pay, it's about what you get. Coordinated strategy, disciplined execution, and proactive solutions that anticipate complexity before it becomes costly.
Now, Jonathan, just this past week, you sat down and did a comparison between a low-cost mutual fund.
What was perceived as a low-cost mutual fund.
There you go. Why
Yeah.
don't you tell us a little bit more about that?
I'm glad you said that. You read my mind.
Right.
So you might think that you're sitting in some passive isn't the right word because they're not exactly passive, but that you're sitting in funds, and just because returns on your statements look good, etc., that you think there's no reason to change what ain't broke, right? Well, this is a current client of ours, and I decided this week to examine the funds that he's currently sitting in, which are at Franklin Templeton, and I was shocked. I was shocked to see. Now, we inherited this client, so Sherry and I don't know a whole lot about his old holdings that are sitting in this old file, but I looked deeper into him. This gentleman is paying higher to sit in old mutual funds between the expense ratios and what's called the 12B1 fees, or advertising and marketing expenses.
Yep.
He's paying higher in a lot of those funds and getting none of the benefits that we offer for the fee that we charge.
Yeah, and so when he has a question, he picks up a phone and calls the 1-800 number and gets a RoboForm.
Yes.
Or RoboForm or Robo-Advisor or a call tree at best.
Yes. And there's nobody, more importantly, calling him every year and saying, hey, time to come in for your annual review. Hey, what's going on with your life? Do we need to change any of the approach that we're in? By the way, this guy's been sitting in these funds for 20 years.
Oh, my
That's
gosh.
right.
Okay, so his life is drastically different. He's retired, drastically different than it was 20 years ago when maybe those were the appropriate funds to purchase. So now we're in a situation where he's spending more to be in funds that sit idle. In other words, nobody's looking over them, and he's not getting annual reviews. He's not having an advisor say, hey, we should maybe drop out of this particular type of holding and get into this because you're older in age. So it can happen where you think that you're sitting in, and we talked just last week about how now they want to not put in the prospectus
Right.
some of the fees.
The expense ratios.
Of even more risky holdings.
Correct.
Yeah.
And so it could be a thing, it could be very deceptive where you think, okay, I'm not paying anything or very low cost for this, and actually you're paying a lot more than you might even pay for an advisor to help you. So that's out there.
It pays to have someone like us take a look at funds for you. So if you ever want to have us do that for you, give us a call. I mean, that's what we do.
Right.
So,
And there's no charge.
that's right.
One other thing I'll say is that because these funds are 20 years old, plus 20 plus years old, they've gotten completely out of whack with the proportion, the asset allocation
Right.
that this gentleman should have. And so he's a lot higher proportioned in assets that he should have a lot lower amount of
the riskier stuff.
Yes, and it makes up about 35 or 40% of his overall portfolio, and that's something that he has no idea about.
Yeah.
He doesn't know. And if those particular asset classes take a turn, it could really hurt his portfolio. And so we're gonna meet next week, and we'll talk through it, and we'll see what he decides to do. But it is riskier than you might think to sit in some old funds.
That's right. All right. Very good, Jonathan. Thank you very much. All right. Why you need to check your Google password now. A report published by Forbes reveals that some 183 million accounts credentials, including many linked to Gmail accounts, have been confirmed as part of a massive data set exposed by cyber criminals. This isn't simply some hacked Google servers story. It underscores the real world risk of reused passwords. Here's what you need to know and what you should do as soon as possible. The bulk of the exposure did not stem from a breach of Google's infrastructure, but rather from what's known as a info stealer, malware, and credential stuffing list, meaning devices or browsers that were infected, credentials harvested, and then those credentials were reused across services.
The big takeaway, even if your email provider, Gmail or otherwise, didn't get hacked, your account still could be at risk because of reused passwords or malware on another device. If your Gmail or any other account uses the same password as one you use elsewhere, or one that you've had for a long time, you're at an elevated risk. Once cybercriminals have obtained one credential, they'll often attempt to use it on multiple services. Even if your Gmail account was not directly targeted, a compromised password used elsewhere could give hackers access to sensitive services, bank logins, social accounts, cloud storage, if you've reused it.
Check if your email address has been part of a data leak. Visit services like Have I Been Pawned, and enter your email address. If yours shows up in a breach, treat it as very urgent. Change your password for every important account. This is crucial, especially if you reuse passwords or if your password hasn't been updated in many years. Make the new password strong, unique, and long. And I like to do the where the software will generate a password for you.
Absolutely.
Because the software usually knows the parameters. It has to have a special character. It has to have a capital letter, whatever, and it can generate one like that.
And it's longer than you'd ever want to remember.
It's like 28 characters,
Right.
And so that's what I personally like to do. But enable two-factor or multi-factor authentication. This is something that irritates people, but it is well worth it. Having them have to send you a text to verify it's you, etc. This adds an extra barrier if your password is compromised.
Yep, and also use a password manager. If you're still using the same old passwords across multiple sites or a simple one, a password manager can help generate and store unique, strong passwords so you don't have to remember them. We use a password manager and it's shareable, so Sherry and I can use the same password for certain programs like Amazon or Kroger, the non-critical stuff, and the items where we are required to have our own password and maintain a separate account, all in one program with a really strong password. All we need to remember is that one really strong password. Of course, you will always want to ensure and make sure your anti-malware software is up to date, and uninstall used extensions and avoid downloading software from shady sites. Consider upgrading to a passkey or biometric sign-in. Passkey sign-in replaces a traditional password, and it could be as simple as a auto-generated or a PIN code. A biometric login is a method of authentication that uses a unique physical or behavioral trait of an individual to grant access to a system or service. This can include fingerprints, facial recognition, or voice patterns.
Yeah, I'm a fan of the biometric sign-ins. Final thought, this event serves as a reminder that everyone is vulnerable to credential leaks, not just big corporations or high-profile targets. Whether you're a frequent traveler, a small business owner, or someone who uses email and a few apps, your digital security matters and is at risk. By treating your email and associated accounts as the keys to your digital world and securing them accordingly, you're taking steps to protect your identity, finances, and a peace of mind.
So do yourself a favor. Take 10 minutes today to review your passwords and settings. If you haven't changed your password in more than a year, now is a very good time. And if you reuse passwords, absolutely change them.
Amen.
All right, we've got 50 seconds. You got anything else to add to this?
Here's my problem that I have. So I have clients who are married and one person does all the bill pay and they have all the passwords and it's not written down in a place where the spouse can even find it if something were to happen. So if you're in a household situation, make sure everybody's on the same page with passwords, because you don't want to not be able to get into stuff.
Yeah, know where the passwords are stored. That's key.
It's a big
if
deal.
If something happens to one of you, the other one needs to be able to get into the critical documents. That is very important. Jonathan?
I don't have anything else to say on that.
No. Corey?
I use different passwords for everything, but it's usually some sort of variation of the same password, and then it's just personal to that website.
If it works for you. All right. Everyone, thanks for tuning in and listening to us today, and we look forward to being with you next week.
Thanks for listening to Your Money, produced by Lifespan Wealth Management. As financial advisors, the main thing we do is provide retirement planning and advice and manage our clients' investment accounts. If you're looking for a financial advisor, please contact our office at 478-922-8100 to set up a free consultation. You can learn more about us by visiting our website, retirerelax.com. If you have a question or topic you'd like for us to address in a future broadcast, email Randy at rfmoney.com. We look forward to connecting with you next week. Have a great weekend, everyone.
Securities and investment advisory services offered through Osaic Wealth Incorporated, member FINRA SIPC. Osaic Wealth is separately owned, and other entities and or marketing names, products, or services referenced here are independent of Osaic Wealth.